Hi, I'm Andrew Kelleher and welcome to the April edition of the JMI Wealth monthly video series. So as I said, it's April and we've seen out the first quarter of the year, which is an appropriate time to reflect on the events of that first quarter and maybe to have a think about what's going to happen over the course of the rest of the year. So the first quarter of 2022 was characterised by volatility, and in recent times that term volatility has become synonymous with sort of markets breaking lower and share markets going down. But we've seen volatility in this first quarter displayed in price action in different assets and markets, sending prices both lower and higher. So it's been volatility in the true sense of the word. And if we just have a quick review of the various markets in the first quarter, it's been a difficult quarter for the local share market, which fell over 7%. However, that outcome was notable for the manner in which it unfolded. All of that weakness was generated early on. It was all in January, with the NZX 50 index posting small gains in both February and March. And that weakness early in the year, in January, that was prompted by falls in the US share market and concerns about inflation and rising interest rates. And look, if we have a look at the US, the S&P 500, it's the benchmark index there, it fell just over 6% in New Zealand dollar terms in the first quarter, which again was concentrated in the first half of that period. The standout performance though in the first 3 months of the year was the Australian market, which in New Zealand dollar terms actually gained 2.5%. And I think the Australian market is a really good illustration that although things like rising interest rates and uncertainty are generally seen as negative influences on share markets, there are sectors that have performed a lot better in a relative sense through that first 3 months of the year than others. So now I'm talking about the banks, I'm talking about the financial sector, I'm talking about companies exposed to commodity prices, so I think the resource companies. Now both of those sectors are substantially represented in the Australian share market and hence the good performance from that market. But perhaps look, the key asset class in the first quarter has been fixed interest rates. Fixed interest, I'm talking interest rates here, they've risen markedly right around the world. And if we look at benchmark interest rates, for instance, the US 10-year government bond rate, everyone looks at that rate, it's gone from 1.5%, 1.5% to 2.35% over the quarter. And locally, the 10-year bond rate, the New Zealand government bond rate, that's risen from 2.38% to 3.22%, so almost 100 basis points. And what's happening here is that interest rates have reacted in most major markets to a sort of a recalibration of the extent to which monetary policy is going to have to react to the surge that we're seeing in inflation, and we're seeing that all around the world. And in New Zealand now, if I look at New Zealand specifically, the expectations are that the official cash rate will have to head above 3.5% by the end of next year. And if I look at historical outcomes, what that would imply is that the standard floating mortgage rate by then could be above 7%, and we haven't seen that for many years. But of course, we've also seen very strong commodity prices. Oil is the one that is often portrayed here, and it's moved to be firmly above $100 a barrel, and that's all feeding into that already sort of heightened inflationary environment. But fortunately, soft commodities, they've also surged, and this has delivered great news for our dairy farmers with our key exports, things like milk powder, enjoying record high prices now. So look, there's plenty of uncertainty now over how the rest of the year is going to pan out, and it's an old adage that share market fortunes tend to follow what happens with company earnings. Now at this stage, there haven't been material downgrades to expectations of company earnings, but we would expect to see some moderation of expectations in that regard as the year unfolds. Now, while there are plenty of headwinds to consider at the moment, we've just talked about some of those, we shouldn't discount the fact that the level of employment in many of the countries that we look at around the world, or that we're primarily concerned with, are exceptionally strong. So while yes, we've got rising interest rates, and yes, we've got higher mortgage rates, and yes, that will bite into disposable incomes. households, because of their strong employment markets, are generally well placed to deal with those extra costs. But look, we do recognise volatility can be uncomfortable for investors, particularly when inevitably it seems to be coupled with uncertainty. The two just go hand in hand. So it's useful to have a quick look at this recent volatility that we've seen, and we look at it in the context of what we would normally expect to see. So one of the things we do here at JMI Wealth is we take historical returns, we take historical volatility, and we model what returns and what volatility we would expect to see over the long term for various different types of portfolios. Now, that volatility that we have seen in the first quarter of this year is well within the range of what we would normally expect to see. And it's illustrative of the fact that financial market returns rarely move in a straight line. We wish they did, but they don't. However, look, it can be unsettling to watch your portfolio value move around. And so I think right now is a really good time to talk to your advisor, or if you don't have an advisor, give us a call and we can get you in front of an advisor. We can get an advisor to sit down and have a chat to you. Check in on your portfolio settings. Have a think about your investment objectives. Have a think about your risk tolerances. And it's a great time to make sure that your portfolio, or a portfolio that you would like to have, does in fact reflect and is consistent with your investment objectives and your specific risk tolerances. So look, we'd love to hear from you. So why don't you jump onto jmiwealth.co.nz. All of our contact details are there. Give us a call, and I look forward to talking to you again real soon.